What's going on, everybody? Morning, morning. See what we get here today. Honestly, a rather large dump so far. I'm gonna go to a higher time frame quick. So if we look at this higher time frame, we've been wanting to see higher prices, right? So this run lower was into our daily volume imbalance. We hold there. We wanted to see these equal highs now get attacked, which we did. We saw that yesterday. So we've now cleared these equal highs. This is a daily level, right? We have cleared now a daily swing point. If I show you this daily level here, right inside of this daily fair value gap, that's what this level is. So we've traded up into that once, twice now. We have a huge volume imbalance here. Right, so we're just hitting the low of that right now. So in daily sense, we have this daily volume imbalance. Right, and that's really what we're playing at right now. So for me, have we closed underneath? We've closed underneath this new day opening gap. I would actually want to see if that new day opening gap is going to want to offer us resistance to continue to actually deliver us lower. So even though we're at that new, or at this daily volume imbalance here, we want to see really what price action is going to show coming off of the opening. So back to that 1 minute. Oh, what's up, Hodge? What's up? What's up? You have to get familiar with the YouTube names now. And Q kind of in the same spot right now as ES. So, like I said, we'll just wait for the opening. Not in a rush to kind of execute or anything. Just want to read price this morning and see what we get. We have these equal lows here, so just kind of notice that, right? This would be sell side. If we're going to create that opening Judas, sell side here. If we end up going up first, I think we'll actually want to revisit that. So if we go back to like a 5 minute here, as far as premiums go, we have this volume imbalance and then the 5 minute fair value gap. So they're both pretty important here. In my opinion, if we are going to clear this 5 minute, close above, more than likely we want to return for this high. Right? Because we've already engineered really the manipulation for NFP. Right? So we create a short-term high, we run that wicket, clearing the previous day high as well. Huge displacement, right? Returning into that displacement fair value gap, breaking structure again, leaving behind a new premium. So now off the opening price, if we are going to push up and through this premium, especially that volume imbalance, that's what would cause me to look for a run higher into this high potentially, or at least the highest premium that's right here. Opposing discount here. So an interesting situation where we have a discount fair value gap aligning with a new day opening gap as we've closed above this high. Okay, so in microstructure sense, market structure shift here, short-term low cleared here. Right, so we can look at this as a bullish framework. But as we mentioned, we're hitting this premium here in an already kind of determined bearish framework as well. So now we really have to see, right, which PD array is going to hold priority. Give us kind of an indication of which, I guess, order flow we're going to want to follow here. if we can clear this, especially I'm even saying if we get underneath consequent encroachment, or we'll go for this sell side here. We'd mentioned since we had these equal lows, if we were going to go up first off the opening, excuse me, geez, if we're going to move up first, more than likely that's that Judas. We're hitting the low of that now. If we even close underneath consequent encroachment, more than likely we want to continue with that run lower. Okay, we actually didn't, right? So notice that. Wicking it, that's why closes are very important. We wick into it. Let's double check here. We hold, do we hold that? No, we hold consequent encroachment, volume imbalance, but one candle's opportunity, right? If this closes in, kind of negates that whole idea. So far, not too much. We're holding that daily volume imbalance. We held that fair value gap. So now, if we're going to hold discount, fair swing, oh, interesting here. Okay, so NQ at the moment has now cleared all of its morning lows. So if ES, yeah, we've cleared all the morning lows. We should get up and through now. Questions in terms of a 100K challenge account. Do you think risk management should be based on the 10% overall drawdown or be based on the 100K? So it sounds like you're doing FX accounts, right? Not futures with the 10K risk. Personally, if you're doing that, since they do have larger drawdowns, I tend to risk a rather large amount in the evaluation phase, right? So if you're in the evaluation phase with the 10% drawdown, I tend to base it off of the actual equity itself. So I'll risk 1.5 to 2% of the 100K. So that'd be about 2% a trade, which would allow me to be wrong 5 times in a row before blowing the account, which hardly really ever happens. That's only during the evaluation phase, though, personally. Because once you get the account, right, then it's more about preservation rather than just trying to pass it. If you're someone, though, that this is kind of your first time or you have yet to be funded ever, I think it's better to go slower route off rip. Right, so maybe 1%, 0.5% risk still of the actual initial balance. But that'll help with the emotions, the nerves of it all. You're getting used to executing. Took a short at 847 down to NFP low. Nice. 847. Volume imbalance entry. Love that. Clean. Yeah, that's clean. We'll see what we get here. Starting to consolidate it a little bit, but all good. Really looking at this, right? So this is that 1 minute fair value gap, new day opening gap. We're off the opening. Huge expansion already, so consolidation would not be too surprising. Last day of the week, we do have an opening range gap here. So if we want to hold, right, this discount, we have something to reach for in the form of that opening range gap. We'll see if we actually want to get there, though. See if I pull it up here. Regular trading hours. So yeah, this is that high, that gap right there. And notice what that aligns with perfectly with this fair value gap here. So I actually do like that. If we're going to get upwards expansion, right, we already kind of pointed that out, but now we're just kind of confirming that as an objective that we can reach into. Go ahead and get that off now. Never actually had an account before. Okay, so yeah, if that's the case, honestly, I would try to go just a little more conservative. I get used to, trading on an account, making profits on an account. But with some FX accounts, I think 1% is plenty. Especially since you're only aiming for usually, 8 to 10% profit as well. Nice. So far, holding that well. Right, we like to see now the bodies are kind of refusing to get near that fair value gap. Low to a swing high to a lower low that gets broken, closing above, right? We also, aside from the new day opening gap and the bullish fair value gap, we're sitting inside of a bullish breaker right here. So bullish breaker, new day opening gap, discount, fair value gap, bouncing off of a daily volume imbalance after clearing a short-term low here. So this sell side doesn't need to be engaged. As I say, I still have the idea, if we get up through this 5 minute, we should reach into this inefficiency here rather easily. Go to a 5 minute. Yeah, there's no inefficiencies. 2 minute. There is some here on the 2 minute, but if we push up through that 5, I think we continue through all of that. Remember, this is the 5 minute volume imbalance as well, so this will be a key area. Because we can clear the 5 minute fair value gap, but still hold the actual volume imbalance, reverse, come down. So this is kind of when we say, right, if we paint outside the lines a little bit, how far could we go? I would allow this. So even if we close above the fair value gap, but can't close above the volume imbalance, I still would really need to see that for added confirmation into this inefficiency here. Where if we kind of get through this fair value gap, close above it, but hold the volume imbalance, likelihood that we actually kind of reverse back into that range. If we can get above consequent encroachment first, that'd be best case scenario. Not able to. So notice that, right? That's really not what we'd want to see here for bullish structure, to where we're going to run this short-term high. We don't want to see price remain in this range, especially because it's that 5 minute fair value gap. So at this point, we have a short-term high being cleared. NQ absolute ripping its face off right now. Coming for this high as well. So we have SMT at the lows, NQ is now ripping. Yeah, still playing around that new day opening gap. So just playing here. We did get that high, didn't get above the 5 minutes, so still really not confirmed for that expansion higher. I think my thing is frozen. What the? Am I tripping right now? Can y'all still hear me? Okay, we're back. What the heck? That was weird. For some reason, the time had disappeared. Oh well. Okay, it wasn't just me then. Trippy. See, that's why I be staying out on Fridays. Can't trust it. No, but if you don't mind showing how Shadow goes about finding daily bias on a normal trading day. Sure, brother. Rather simple, right? I keep it pretty easy. I start with kind of these daily objectives. A little ugly now, but right, we'll kind of go back to it. Because our daily objective was this swing point and we got into it yesterday, I actually don't hold, any, I'll say, significant strong bias at the moment. Right, so I see that we've cleared the daily high. I want to see that as kind of a buy side objective. So in my mind, we've cleared the daily high. We've ran short-term equal highs. My attention now goes to this higher time frame 4-hour fair value gap. So now as I bring that 4-hour fair value gap up, drag it out, right? We continue to look within here. So I say, okay, well, we have a daily fair value gap here, but we're holding the actual daily volume imbalance itself. So after clearing a high, we can retrace into, right, that daily volume imbalance. We would expect that. So that's why I had labeled that daily volume imbalance. And I'm seeing, at this point, my bias is what is the reaction here at this daily volume imbalance? So I don't necessarily have a bias of trying to reach into this daily fair value gap. It's more of a wait and see type. Right, so for me, I'm waiting to see, right, once we've traded into this daily volume imbalance, what kind of price action do we get that can give me a better idea of what my bias is at this point? So now if you've kind of seen so far, right, we had that opening range gap up here. We had NQ running out this low while ES is failing to. So now we have SMT at the lows. We have a discount being formed right aligned with the daily volume imbalance, and that discount held us and absolutely displaced us higher through a new day opening gap. So as I'm starting to put all this together, right, that's that narrative. I'm saying, okay, discounts are holding. We have already created SMT, another bullish confluence. We have sold off aggressively following NFP, right? People are probably going to want to try to pile in on this to continue to dump it short. So now we have sentiment going really against us, right? We have stops to target if we want to come back up into this high. So as I look at this, everything really is building for me the idea of wanting to run higher. So now it's just a matter of looking for an entry. And I'm actually in an entry right now, right, using the new day opening gap itself. So as we close above this new day opening gap here with this candle, leaving this fair value gap, I'm getting long as soon as we tap that, stop underneath consequent encroachment of this fair value gap, because we shouldn't have to return into that since we've already repriced into it perfectly. Right, this candle reprices into the low perfectly. Once we close above, this fair value gap becomes balanced. So not only are we closing above this fair value gap, but now this candle closes back above the new day opening gap. That becomes a strong discount that we would expect to hold us. Right, so as price returns into that, I get long, and now I close it at 5 handles right there. So I'm out already. We'll probably continue to pump. If we don't pump, that's fine. Right, Friday, NFP, low-hanging fruit is really my objective. Internal range, inefficiency is the target, and that's all that we were looking for. All right, so let me show you here, in case we keep running, which, right, we may. So as we said, we're just waiting here. We want to see what price does. We get the huge runoff. We get the consolidation. We get this Farrier swing to run out the low. And as we mentioned, right now we're holding the daily volume imbalance. We create a new discount here. I'll go to the 1 minute. I was really using the 30-second for execution, but we can look at the 1 minute. So that 1 minute, we run into that fair value gap. We leave it. When we leave this, right, closing above, as I say, I'm entering on the next candle. So as we get above that new day opening gap, come back into it, I get long for the first time. Stop underneath consequent encroachment because we've already done the work of getting down into there. Right, so we enter on that candle, stop underneath consequent encroachment. Get close to it, not really worried though, right? If we're on sides, that will hold us. We were just aiming for there. 5 handles. As we said, we'll probably get into this, more likely than not. But I'm fine, just low-hanging fruit this morning. Now I want to see if we can get into this. Right, we expand right through that volume imbalance, so I like seeing that. All about those base hits. Yeah, for me, right? Consistent plays over time. That's all you need. At this point, really, right, treat it as a job rather than windfall victories I'm trying to achieve. So now my interest lies here. Okay, we have created a new fair value gap. We're running into now another inefficiency. So I would really expect the same thing that happened here to happen here, to where I want to see this buy side be ran through, right? Get these stops. In order to get to those stops, we may hesitate here, give us a run back into this 1 minute fair value gap, discount, right? Why am I looking at this one? Well, we look to the left, and what do we have here? Well, volume imbalance, inverted, perfectly aligning with that fair value gap. So seeing as how this candle's already hit that volume imbalance, if we're really bullish, we don't give a retracement. This becomes a breakaway gap. We get through this fair value gap and into the buy side. If price does want to give a retracement, I wouldn't look any lower than this, because now we're really being sandwiched by two volume imbalances, right? This was the 5 minute. This is that 5 minute volume imbalance here. And now this is the 1 minute. So really, I'm seeing this as kind of the important fair value gap, where I wouldn't want to see lower than the 5 minute volume imbalance, which means I wouldn't want to see lower than the fair value gap itself. Which also means that this fair value gap here, right? People often ask, how do we know which one becomes breakaway? This, in my mind, if we're reaching for buy side, this becomes a breakaway. We should have no intention to return into this fair value gap or this volume imbalance here, in my opinion. Right, so even though we have untapped inefficiencies here, this is where I would want these to remain open until we reach into buy side. Then at that point, we can give a retracement all the way down into these ranges if we want. But until we get there, this is really all I would want to see lower, right? Because it's the 2 minute. On the 5 minute sense, nothing there, but we understand the preference. So I'll move these and this and that. And we'll see what we get. NQ, right? Absolutely gone. So we should see ES just run. One thing to notice, let's watch this as a potential volume imbalance entry here. Right, we won't take it since we're already profitable, but what we'll look at is we want to see once we hit this candle's close, right? If this candle here protects that volume imbalance. So it'd have to stay open, right? It looks like it wants to come for it right away, which is fine. So we come back into the lower one. Okay. So now from here, this is really what I want to see. What kind of reaction we get. Right, inversion volume imbalance for the first time. Like we said, hesitation expected from this fair value gap. Last premium prior to liquidity will often hold if we're going to hold within the range from high to low. Our current dealing range is this high to this low. We create the failure swing at the low. So not surprised to see the failure swing being created now at the high. And now the fact that we've actually ran back down into these lows, volume imbalance here, aggressively. Yeah, that's more of a consolidation tactic there. Let me see this 5 minute. 5 minute has yet to be, this is the first time we're getting into the 5 minutes, so we'll watch this carefully. But if that 5 minute gives way, watch all these lows. Because now, right, we wanted these lows to hold on our long, which was nice. But now that we've been really TP'd out, what is this? All right, let me hide all the drawings. Well, this becomes a lot of trendline liquidity. Right, we don't use trend lines in any sense, but retail traders do. And their stops are going to be jammed underneath, right? All of these lows. They're going to be trying to buy this here. So it might even give them another fake bounce to engineer more of that liquidity. But now as I look at this, I'm thinking, okay, we've hit in that premium fair value gap. We've now completely disregarded, right? This is low resistance through these discounts. So when I see that low resistance through discounts I expect to hold, that is an indication for me anyways that, right, price is going to move really against what I'm expecting. So if I wanted to see this hold for higher prices, displacing through it, especially leaving a volume imbalance, to me means that we want to use that as resistance, more likely, to clear out, right, as we mentioned, just all these liquidity lows that we've left here now. So we'll see what we can get. I'd almost want to, we do have that volume imbalance there. Trying to debate here if I want to take this execution. Maybe we just paper it. I think we'll do that. No need to be too greedy. So what I want to see is, right, this inversion here paired with that volume imbalance. We do have the inversion 5-minute volume imbalance, which we've hit and held, right? Perfect delivery. I had a limit set in the actual inversion here. Stop was above, right above consequent encroachment of this fair value gap. So my limit was set here, wanting to use the volume imbalance paired with the inversion for entry. To target now, right, really the first swing low here. So low hanging fruit. If we want to, we can come for these equal lows. But we may not even actually get our entry now. Closing underneath the 5-minute consequent encroachment may be an early indication that that now offers us resistance and we don't get back above this 5-minute fair value gap here. Which if that's the case, right, we're not going to get back into our entry here. Instead, holding the volume imbalance, immediate rebalance, continue to push lower. Consequent encroachment of the 5-minute will hold. Don't want to get too lost, but now we're looking at this, right? So kind of a lot of moving parts. We're looking at this 1-minute inefficiency here. So to me, closing underneath, which we just did. Okay, so now that's probably a short right there. But we'll see. So now we've closed underneath, as we mentioned, the 5-minute consequent encroachment. We reject, trade lower, close on the actual consequent encroachment of this 1 minute, the lowest discount. So we'll see what we get here actually, because we open with a volume imbalance, but we often talk about the one candle's opportunity. So if this one candle can overtake closing in that volume imbalance, it kind of nullifies the fact that we created that in the first place. Right, we're kind of resetting that price delivery. Let's see, NQ, okay, dollar, ES. There's that, we should have papered that, to be honest. Like that. We'll taper it and see. Right, this was the original entry setup here. Volume imbalance for entry, inside the inversion, stop above consequent encroachment of the 1-minute bearish, which is also right above this. We're not in it, so full transparency, not in that at all, full tapered. And we're not in this, right? Why am I choosing not to be in this? Because we cannot get underneath this 1-minute fair value gap. So that's what's causing me to stay out, right? I think that's important to kind of explain. Is that had this run lower, closed underneath this fair value gap, bounced off this 830, then retraced, I would look to actually short this because in my mind, this price leg has confirmed bearishness by closing underneath this lowest premium. But instead, what do we get? Well, we hold on even consequent encroachment. So can't even close below consequent encroachment. Also notice we're holding the low of this 5-minute fair value gap. Even though this candle looks like it's lower, right, the close is what's important. This opens with a bearish volume imbalance. One candle opportunity completely negates that, closing back, even more importantly, above the 5-minute consequent encroachment. So what happens after that? Well, notice we get back above consequent encroachment. Next candle taps that consequent encroachment perfectly. So now, right, we're respecting discounts. We're respecting discounts after failing to break through them. That, to me, tends to aim for highs again, right? After this return into the discount. Because as we said, I would have wanted to see this return after buy side. But since we've hit this premium, returned and held, right, we can still look for that buy side. So now I'd want to see this volume imbalance. If that gets left open, we use that. So let's kind of clear up some junk. Let's make sure, just want to double check what we had as far as news today. Yeah, okay. Right, high impact news here at 10. So we're going to wait for that. Not trying to be in front of that news, because then we get, right, more likely than not, smacked out. News should give us some type of movement. I guess one thing to notice is that NFP, okay, so when we have large, very large ranges created by news events like NFP, other news events tend to not be as volatile. So I wouldn't be surprised to actually see us kind of hold and just hold that, pump up into buy side potentially. I like that idea. I just don't want to be in before the news, to be honest. So we'll wait. If we get another entry, that's cool. But if not, right, and we run straight into that, that's fine. We can give it a paper entry, actually. We'll do that. So paper here, just want to be in with this news to see if that will hold us, right? Just going in with one. High risk, low probability, do not follow. Purely wanting skin in the game for the news. Still tight stop, right? For me, for this news event, we shouldn't really get below this 5 minute. Would like to see just that expansion into buy side potentially. If we're offsides, we're offsides. Five seconds. Closing underneath the volume imbalance, not ideal. We need to get back above this inversion and close above it. Not do this, okay? Not wick it, wick back into it. We need to actually push through that, close above it, or else we're going to consolidate here and more than likely actually want to reverse. Because now we've hit the low of this fair value gap perfectly. Yeah, not looking too good. Okay. So right, instead, notice what we're doing here. We're holding now. We close with this candle underneath this volume imbalance. I don't like to see that because now we're going to try to use it as resistance. 10 o'clock news here. So this is still the news candle. If this news candle can get back above, right, that fair value gap, I'd be confident looking for that resumed bullish activity. If we get stuck in this fair value gap, not a good sign. More than likely, we kind of chop within that, right? Because we have this inversion with this one bullish. So I want to see price actually start expanding away from that. If we look within this 1 minute fair value gap now, we've created a bullish volume imbalance. So what I would need to see here, right, to confirm bullishness is that this stays open. If we're looking for price to expand, we don't want to see the bullish volume imbalances closing in, especially when we have other discounts that should hold us, right? So I'm looking at this now. In an ideal world, we hold from this volume imbalance. We leave the volume imbalance here open now, right? Engineering another volume imbalance that we could then use. And what's important about this volume imbalance is that it'll be created as we are leaving this 1 minute fair value gap and hitting the lows of it. So if this was to remain open, I would actually go ahead and jam my stop up really below this, because now I'm seeing this is a balanced fair value gap. And ideally, I wouldn't really want to see much lower than that even. All right, with the choppy opening though, we'll go barely here. So we're underneath this fair value gap. We'll allow this because we are back and forth here. But really closing back above this 1 minute fair value gap with a volume imbalance, right? I don't want to see the body start giving that up. So like if we got going right underneath that, that's that indication of a consolidation market where we're not respecting PD arrays in any given direction. right? Up and down through them. Yeah, we allow that, so that's fine. Ideally, we hit that and hold, right? So all I'm looking for, all my attention is within this fair value gap. How far can we go outside of it? Well, we have these other discounts. That's the wicks, but bodies themselves, I don't want to see bodies give way to this. So far, so good. Honestly, if this wick was to hold the volume balance, that's even better. Cool. All right, so we are able to actually. So that's nice. That's why it's important to wait for the close. At this point, because we have wicked fully through into this volume imbalance, we've wicked this fair value gap. I would almost feel comfortable putting my stop under there, because if we run that again, we'll leave it here. It's close. Already though, okay, with seeing how price is here, this becomes a low probability entry. So if I was in this with a live account, I'm cutting risk immediately, closing half of the position to cut my risk, right? That way, in case we do run, we still get profits, but no need to take a full stop out if the market's not really moving as I would expect. I must say, most informative. Hey, Mike. I'm glad you're finding it helpful, brother. Simply want to share, my experience. I've been doing this for a long time, so I figure at this point, I could share what I've learned, things I've picked up over the years, what we expect. Already right there, I want to close, to be honest. We'll leave it because it's paper, but right back underneath the volume imbalance, not a fan. Especially right back under this. So in this one candle, we've negated both the volume imbalances. I'll look at a 2 minute. The 2 minute has no inefficiency except here. And the 2 minutes already hit that, which is why I'm really saying this low, I want to be protected. Let's see, there's NQ breaking lower. Dollar just ran a high. So see, yeah, low probability here. Everything's desynced, right? If I kind of show you around, just kind of shop around the other markets. NQ kind of moving similar here in ES. But now when we look at the dollar, right, dollar pumping. Let me put it over here. So seeing that, right, we're pumping the dollar. We're refusing to get above this. So as we said, we would already have cut the position because we've struggled to get above that fair value gap, and now we've negated the volume imbalances. We'll watch one more time as we run into this fair value gap. But now if we can't hold this, more than likely we actually want to go for our stop here. Because right, as we mentioned, if we are refusing, so here we've had multiple opportunities to wick that fair value gap and try to get above it. But right, this is price showing us it's unwilling to try to do that. And now when we look at, right, the dollar, that's why we understand, okay, this entry is not going to work out. Because we already should have moved from this discount and we are unable to. While at the same time, the dollar is showing, right, a willingness to pump up, and NQ at the same time is kind of trying to go lower as well. So if that's the case, right, we're not really going to expand quickly. We're going to hit this consolidation, which we see here, and that's fine. Right, still no entries for us besides the very first one this morning. Not in a rush to do anything. Clear-cut setups. Now I'm looking at this though, 15-second chart, right? All this becomes buy side to me. So I almost want to do a 15-second scalp. Because let's see, right? We've just cleared all that buy side. So dollar could give a retracement back into the range, which would allow us to capitalize on. We're on the 15-second here. Let's see if we can't use this 15-second volume imbalance right there. Still nothing live, right? I don't want to, it's Friday. I don't really ever trade NFP on Fridays anyway. So the fact that we have one trade and one winner, I'm not going to go back in and try to give that back. Right? Capital preservation is the biggest key to long-term success in this. Anyone can make money. Not everyone can save their money. but we'll read this itself. Volume imbalance entry here. So for those that are familiar, if you're using the volume imbalance entry as we teach it, as soon as this candle taps this candle, that's where we try to enter. Stop underneath the swing low of the candle that creates it. This is more of a mechanical entry because if that volume imbalance gets closed in, you immediately close the position. Right, it's really important and kind of reliant on the idea that we run higher or leave the volume imbalance open anyways. So yeah, we close that. So right, so this position, boom, we close. Holding this fair value gap. And this is where it's tough because, right, we could say, sure, we're showing that we could hold this. So could we go long here? I mean, you could. But at that point, we're just longing patterns for patterns' sake, right? The narrative within this is not reaching for anything. We already hit the objective of, right, this daily volume imbalance. From that daily volume imbalance, we were returning into this inefficiency, right? Because remember, our current dealing leg is this high to this low. So this is the current dealing range we're within. Well, we've already hit the lowest discount here in the form of this rejection block, right? That's where we hold. Notice that, holding the mean threshold perfect, holding that fair value gap. So discounts have held, as we said, highest premium now before liquidity. That's what's the target. That's here. Now that holds us. And look where we are, right? If I bring high to low up now of the range, pull out equilibrium, bang. We're right back inside equilibrium. So at this point, we're in equilibrium of a range that is consolidating on a Friday with NFP, while, right, NQ and the dollar are kind of moving against it. So this is why I'm saying everything in here is showing high resistance, low probability conditions. And that's more important, I guess, for me anyways, than knowing like when to enter the trade itself, right? When not to trade is just as important. You learn capital preservation the hard way. Hey, I think we all do, unfortunately, right? It's one of those things where we say, hey, you should do as I say, not as I do. Learn from others' mistakes. But for some reason, humans don't tend to learn that way. Got to make the mistake yourself, learn from your own mistake, then it's real. At least I know that's how I was. In some ways. Right, Michael preaches certain things that we should and shouldn't do, but it's really like until you do it yourself and realize why you shouldn't do it, it doesn't resonate with you why to avoid doing those things. Give it up. Give it up, down. We've got a higher time frame. So back into this inversion once again. So because we're not necessarily, right, I had this volume imbalance here initially. We use it, that's where we exit. But now we're not necessarily kind of respecting it too much, kind of. Right, at this point, I'd rather just kind of not worry about that and use the fair value gaps. So now, right, back to the fair value gap itself. This is equilibrium. Equilibrium is basically the 5-minute fair value gap consequent encroachment. So I'll kind of remember that, leave that. So at this point, right, the 5-minute has my attention, and this 1 minute here has my attention. I want to kind of do a 15-minute execution here, or a 15-second in a way. Let's see if we get above, in my mind, this here. What's NQ up to? NQ, NQ, NQ. Oh, this is dollar. So dollar, after running previous day high, consolidating. If dollar wants to run again, more than likely, right, we start pump or running lower. We just have so much liquidity right here, man. I want to get that first. What's NQ up to? Does NQ have the highs? Nope, because NQ cleared that high. Wasn't able to clear that high. Yeah, we're getting pretty ugly delivery here, folks. If I had to choose, I do think we actually want to go for this low again here. Just kind of looking at the other markets, right? NQ is finding resistance at a new day opening gap, midnight level. Looking heavy. ES now at the same time holding resistance levels. Right? Dollar at the same time. We'll show you the dollar now. As we said, already kind of accelerating. So that's going to want to, yeah, cause us to dip. Okay. Let's go back to the 1 minute quick. I forget we're on that 15-second. First time closing underneath that. So let's try this. We'll try one more paper trade actually. Once again, right, high resistance, low probability, why we're in a paper environment. But closing underneath this 1 minute fair value gap here, we have now created that as an inversion. This is the first candle to close underneath it. So if we wanted to remain bearish, this swing high above should hold if price really wants to reach for lows, right? So we can try something like this. To stop above this higher inefficiency, because now, right, like we say, if we start coming up and down through this, that's just consolidation conditions, which we're already expecting, which is why we're in the safety of a paper account, right? No harm, no foul. I could care if I take 50 losses. I could care if I take a winner, really, because it doesn't matter. And seeing that, right, we're going to close it right away, because already we're not getting the delivery we'd want to see. Boom. Easy. All right, back, forth, protected low, still holding. You classify the 843 candle on NQ. We could look at NQ. 843. 843. 843. 843. Here. Yeah. Low. To the high, to the lowest low. Right? Rather large. We take this low up to this high. All the way, not to this low, but to this low. We close above this high. Here. Nope, here actually. Yeah, okay, so we close above this high here, and notice when we close above the high, what gets left behind? Right there. Fair value gap. Breaker. Look at that. So, all right, first discount after clearing the breaker here, holding the bodies, but also the breaker itself. Yeah, clear breaker on NQ for sure. That's pretty clean. All right, I want to see if we can get, so we're revisiting this premium again now. We should actually get up and through that premium at this point with how we're playing there. Dollar still pump. Interesting. I mean, ES and dollar moving at the same time. Okay, so when we see that, that's just wonky, especially, right? That's aggressive. Dollar absolute pumping. ES also running higher. One of two things. This is false. We run this high, we break aggressively lower to clear out all this liquidity. Dollar keeps pumping. Or dollar gives up. Dollar breaks structure lower, which actually sends ES even higher, right? And we start kind of accelerating. If dollar gives any pullback, seeing as how they're both moving at the same rate, in my mind, if dollar gives any type of pullback whatsoever, ES should, right, kind of accelerate, blast off. And Q at the same time wasn't able to clear this high, right? We see that. We now have buy side here. NQ should get up into that high, in my opinion. We'll see. We'll see. 1017. Okay. I like that volume imbalance. We've created back to back. I want these to stay open. Okay, now I'm kind of gauging bullish order flow. These need to stay open here, and we need to get through this high. We need to actually close above that high. Right? We don't want to see what we saw really the first time we get into it, where we wick it purely. The fact that we were able to get a candle body to close inside of it already kind of gives me some hope, but not too much, because NQ, as we mentioned, is failing to run higher. Dollar still just stair stepping higher. I want to see that dollar. I'm really looking at this dollar index here. Right, I want to see these lows just quickly. If we can even just quickly stab through these lows to return into this inefficiency, right? This breaker, low, high, lower, low, broken. New day opening gap or previous day high. All right, so we have buy side here and buy side here now. NQ once again though, right? Can't get into its high. So far not looking too swell. Let's see if we can't get a quick acceleration through that, right? Just a quick pump up into that. Da 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 da. What up, Surf? Welcome, welcome. Dollar does not want to drop. Dollar is not about it. We haven't really even used the dollar too much, which is why I'm still not too, I guess, worried, but it's just more of a confluence. Let's go to a 5 minute. All right, look, that's super bullish. So is that. But I don't like that. Let's at least get that buy side then. Falling short. Yeah, we're playing there. We got to get into that. So I'm looking at this volume imbalance here. I would not want this to give way before that high gets taken, or else just not looking too swell for that idea. Right, because as we said, dollar still just pumping. NQ failing to. That's not good there. So now watch this. More than likely inverse that and go lower. We'll give it the one candle's chance to get back above that, but it's not looking too good, folks. One candle's opportunity would be ideal. Push us right through that buy side quick. And then we could start melting if we want to do that. Man, price is playing. That's all right. So I got long here, okay? And I'm going to try to, all right, now we're out. Beautiful. That's so beautiful. All right, fellas, that'll be it for today. Okay, we got one more entry. Here. All right, so we share the original one using new day opening gap and the 1 minute fair value gap here. So as we are holding that, showing bullish confirmation with an obvious inefficiency, we take that long. We got out of the volume imbalance, but as you saw, right, we reach into the inefficiency. We then retrace into the 5 minute again, holding it still. That's important to me, right? We're still holding the 5 minute inversion here. I'm seeing that on my 5 minute chart. Candles have yet to even get near consequent encroachment. So even though this is ugly in here, in my opinion, it's showing more bullishness still into, right? I wanted this high. This was my morning objective, that high there. So for me, all this in here, right? Ugly delivery, but especially seeing this candle here, right? Aggressive down close candle, closing on its low, but failing to break this swing low. Very next candle completely negates it and closes above. So now to me, this is an order block. Once we close above this candle, that's this change in the state of delivery in my mind, right? Notice what this candle does now. It taps into that order block, accelerates above this original fair value gap here, right? Which was a 15 second I was using, right? It was that 15 second. So this was a 15-second chart entry, right? Which shows this stuff happens on any time frame. So as we break back above that 15 second, that to me is the trigger point, because at the same time, what have we created? Well, low, a high, higher low. That's a mitigation block. So now we have a mitigation block aligned with the reclaimed fair value gap. And it's also aligned with, guess what? This is what we love, that volume imbalance. So as we close above this, right, I'm seeing this on a 15 second. I'm saying, ooh, I like that. As price trades back into that volume imbalance on the 15 second, aligned with our mitigation block, that's where I get long, right on that level. So right on that volume imbalance, boom, we buy. We catch the swing low. What is that? One tick of drawdown. We then accelerate into, right, buy side where we exit on the swing high. Beautiful. Kind of what we come to expect, right? Swing low entry, swing high exit. This was our final exit. We didn't get there. That's fine. Just as I said, external targets, your external targets don't need to be met to be profitable. Not at all. I mean, you've seen it here, right? Catching the middle of the move, internal range buy side. The same way I took the partial at the internal range inefficiency rather than this one. But all in all, price moving just as we would expect. Beautiful to see. Clean delivery. Let's read up what we got here. 50% off the wick, first day of the month. Yeah, definitely not ideal trading conditions, right? If you're going to trade in this, you have to be very nimble and know what you're looking for, because this type of price action gets people, right, thrown off quite a bit, to be honest. And especially, right, with the idea that dollar is moving up as well, you really have to have the conviction to trust that. So to me, I trust this. These are the stops that price is going to want to target. Right? Anyone that was short, like we think about it, anyone that went short following NFP in here, well, where's their stop? It's going to be here. So all this in here, right, is engineering more people to start piling in shorts here, right? Sell the double top, sell this goddamn trend line once again, whatever we call it. And now we see the reaction we get. All right, notice what else did we hit to the absolute tick? How far above the buy side can we go? Well, notice what we're in, right? This is the 4-hour fair value gap, I believe. Let me just double check. Yep. All right, so the 4-hour fair value gap there. How high above the buy side can we go? Well, look at that. I mean, can't get more perfect, right, than that. Perfect delivery right into the 4-hour. Rejection back into the range. And yeah, now for us, right, we'll be content with that. I took the same long trade for CISD. I don't know what that is, but CISD. I mean, you could tell me what you're entered, sure. Send whatever you want, brother. I don't know if you could actually send it in chat, if you can send pictures, but I don't even know what instrument you're talking about. CISD. I don't know what that is. Sorry. I did enter on the 15 second. Yes. There. where you cut your loss short. I didn't take, oh, okay, if you're referencing the paper account, let me see here. 1013. Oh, okay, so you're just saying you took the same long. Okay. Oh, there we go, Dylan. Thanks. I'm like, what the? I just didn't know what that meant. I'm like, what do you mean by that? I thought it was an instrument or something. Okay, okay. Well, there we go. You're not good at trade. All right, as we said, that's really, as we mentioned, that was the change in state of delivery right here. These two down candles running into the 5 minute, failing to break this low, and then being displaced up and through while closing back above the 15-second. Right, that's that change in state of delivery, which is why we have no hesitation going in. Well, that's the paper account, of course. That's why we have no hesitation going in and catching that swing low. Looking at this now, right, of course, I'm always going to say, well, I wish I would have held till buy side. For those that know me, that's one thing I'm never content with is my exits. Even though I tend to catch swing highs, just not content, right? Just want to be perfect every time, which is very impossible. So I've come to just accept it, right? Content with enough. That's why I have this here. Remind myself. Be content. Oh, big stretch. Yeah, at this point, I really have no interest in it at all. Let's see what we're saying. Also ran up to OTE. Also ran up to OTE. Here? Yeah, I can see that. You're saying probably from high to low. It's probably OTE right there. We'll measure that just for fun. For fun skis. Hello? Main fib. There it is. Oh yeah, look at that. Hit that level perfectly. White line, OTE. 4 hour fair value gap paired with it. Clean and high. Total soup. See, now we might run lower. Who knows though? Are you trading full time? Yes, sir. This is all that I do now. Trading game, baby. And golf. Trade game and golf. 1020 would be breaker. 1020, 1020, 1020, 1020. 1020. Nah. In my opinion, I mean, if we broke the low, I guess. Let's see. It'd be ugly, but we'd have to break through this candle. Right? So high here to this low to this high. If we break that low with displacement and we leave, right, another discount or premium, excuse me, then we could see that. But as of now, this is an order block. One little tidbit of sauce, right, in case you guys aren't sure. Order blocks usually will become the breaker block if they get invalidated. Right, so invalidated order blocks become breaker blocks. How can you know the change? I dropped a comment earlier. Could you provide more insight? Let me see. Oh, there it is. Okay. You still have a small challenge in knowing when to trade ES or NQ based on which asset. So to me, right, that's honestly pure preference. Like I only trade ES. Regardless of what NQ is doing, right? NQ could be giving me the cleanest price action of 2024. But I'm just, bruh, let me get there. What the hell? Okay, there we go. But yeah, anyways, like I was saying, right? I always trade ES just because, in my opinion, it moves, we'll say, more precise. NQ will give bigger runs. I have found personally, though, that I can have smaller stop losses more consistently with NQ or with ES. So that's what I do. So it really comes down to that personal preference. So notice here, right? Like we were talking about, if we get under this, leaving a discount, we left that discount here as we close below. We'll try that. So now we use the breaker to get short. Back into, where would we want to target though? 1 to 2 maybe, simple. Something simple like that. 1 minute chart. Yeah, we'll try something simple like that. And then we'll end the stream here. $5 minute, right? We've cleared the buy side real quickly. Dollar still just pumping, okay? So the dollar's still going higher. I want to see this breaker send us lower. Oh, we're hitting that. Go ahead, tap us in. I'm lagging. I'm getting lag switched out here. All right then. So I guess we don't tap that. I'd be weak if we went immediate rebalance and just run, but we'll give it a chance. Okay, bullish volume balance. We actually probably do get back up in there. Any options trading recently? No, sir. Not too much at this moment, right? We've reached kind of all-time highs in SPY, and I tend to use SPY, so I'm kind of just waiting to see what we get before going back in on the options chain. How can you know delivery change? All right, Arian. Well, right, that's kind of comes with, I guess, experience and understanding. So like for me, right, why am I looking at this as that change in state of delivery here where we enter? Let's get stopped out here first and then move this chart. I could care less about it. We'll bring up the actual chart. Right, so I'm looking at this. It all really originates from this 5 minute. So to me, this 5 minute here is our inversion level. So when we first, right, trade above it here, return into it and hold and get back above it. As long as we can find support here, I trust the idea of going higher. All right, so as long as we're holding that 5 minute, I'm looking for higher prices. Currently, to get down into that 5 minute, we're going to have to put in bearish structure. So now, right, that's why if we go to like a 15, we could see it better. On the way down into this 5 minute, right, we're obviously putting in bearish structure. We're clearing short-term highs, we're breaking through lows, we're holding premiums, breaking through lows, clearing a short-term high, right, breaking through lows into this 5 minute. So all the way down into here, bearish. We get underneath this fair value gap, we're still bearish. So I'm waiting for the change in state of delivery. And what that means is I'm waiting for a sign that we're going to resume bullish activity. For me, that basically, right, resignation of bullish activity comes once we clear this high and close back above this 15-second fair value gap. Because you see, right, once we close below it, we're using it as resistance here, right, trading up into it, using it as resistance again to trade us into this 5 minute. So if we're going to clear that 5 minute resistance, that should become a discount. So now as we see, right, we clear that, especially with displacement. Notice from this low to this high, all bullish candles. So that's just as important, right? The displacement, the speed at which we do it. We're in a hurry to clear this high and close back above these discounts. When we do that, we leave another discount in the form of that volume imbalance. At that point, I'm fully confirmed that, okay, right, we are now going to resume bullish activity because we've cleared sell side. We held at the 5 minute consequent encroachment, and now we've put in a Ferrier swing, right? So we hold at this rejection block, creating an intermediate swing low, and then breaking structure here at these equal highs. So that's what I mean when I say that is that market structure shift, right? This becomes our mitigation block. Our mitigation block is aligned with a reclaimed 15-second fair value gap, which is also overlapped with a discount volume imbalance coming off of a higher time frame discount, right? So at this point, everything was pointing towards higher prices, which is why this spent very zero time in there, right? We tap it once, catching the swing low, body doesn't even get near it, and then no other candle gets near it until, right, we exit and basically hit our objectives. And now we retrace into that level and start consolidating. So a lot goes into it, a lot of moving parts, but eventually it becomes simple. right? I'm simply looking for an invalidation of bearishness and looking for bullishness price action to start taking place. And that was here. Especially this, right? We often speak of no upwards wick, immediate one side delivery. Once we close above that, that becomes our order block. Maybe I have to release that video, right? I have the high probability order block video that we speak of. That is one there. Alrighty. Yeah, I think we'll go ahead and wrap it up here, fellas. If there's no more questions or anything. Appreciate y'all coming to chill this Friday. Most viewers I've had on a Friday. I think I want to do more of these streams here on YouTube. So look for that in the coming month or so. Just tuned in, missed it. Oh, damn, numbers. That's too bad, brother. It's all right. You can watch the recording. I guess I'll run through real quick, right, both entries before we do that. So a little recap. We should go long here, to be honest. This is probably a long right now. That would have been a clean long into this high. But oh well. Watch that. First entry came. All right, so following NFP itself, huge exaggerated sell-off into a daily volume imbalance. That was the objective. Right, we hit that daily volume imbalance. We give some consolidation. But then notice we clear a short-term low here. We break structure at this high. So this becomes really the setup that we were within. We hold at this rejection block that's paired with the daily volume imbalance. We then displace again above the daily volume imbalance, leaving behind a 1 minute discount fair value gap here. So at this point, we're starting to see, do discounts hold? That discounts holds us, displaces us through now our new day opening gap, leaving behind another 1 minute fair value gap. At this point, we've engineered the breaker as well, right? Swing low to a swing high to the lowest low getting broken. So we have a bullish breaker. We have a new day opening gap, bullish. We have a bullish discount. And now we're coming off of a higher time frame discount and holding that. Right? So a lot of higher probability, I guess, signatures pointing here. We go ahead and get long on that 1 minute fair value gap. So as price trades into the low, closes back above, that confirms that we're going to use that now as support. We get long there, stop underneath that fair value gap. And our exit comes right at this volume imbalance here. So just inter-range inefficiency, a quick 5.5 handles, low-hanging fruit. We end up getting into the higher inefficiency here. And at that point, we said we wanted to see eventually buy side here and see us get through that fair value gap. So we hit it first initially, we retrace just back into now these discounts, right? This 1 minute fair value gap, this 5 minute inversion. We hold that level, accelerate again, holding at that fair value gap. So to me, this is just engineering liquidity to run later, right? We have buy side here and buy side here now. So this run lower, simply returning into the 5 minute inefficiency again, still holding. And then as we noted, this becomes that state in the change in state of delivery, excuse me. So this down close candle fails to run out this low, holds the 5 minute, very next candle overtakes that high, becoming the order block. This candle uses that level as support, accelerating us through the original 15-second fair value gap. And then that is where our long comes. Right, so once we accelerate through, leaving behind the volume imbalance aligned with the mitigation block, entry comes right on the volume imbalance itself. And this exit now becomes the buy side liquidity we were aiming for. So we catch the swing low up into the swing high. We did run that buy side, and as we said, right, this would be a long as well into more buy side. We missed that, but we're content with enough this Friday. So we end up catching these nice two moves. More than likely, we actually reprice fully into this fair value gap of NFP. So I'll look for that. But for us, we are content with today. Boom. So yeah, overall, clean day. Clean, clean, clean. I do want to see real quick with this huge pump up, did the dollar sell off? Is that why? Yep. So as we said, right, if dollar showed any willingness to run any of these lows at all, ES was going to blast. Well, dollar turns over, right, starts running lower, which sends ES straight up into the midnight level. Yeah, that would have been such a clean, actually, area to go long. Right, that inversion. We completely invert it, leaving behind a 1 minute fair value gap. High probability entry, especially seeing as how the dollar was selling off at the same time. Hey, all good, all good. So yeah, we'll leave you guys with that. Not a bad Friday to wrap things up with. Honestly, I'm still bullish, right? Long term. So when we come back, I still want to see just continued bullish delivery, right? Nothing in here is pointing towards lower prices, in my opinion, yet, right? A lot of people were shaken out by this. We understand this was simply running into this volume imbalance, right? After this extended pump up, we're going to return into a discount. We do. We have now gapped with another volume imbalance. So we should actually just continue to run for really new highs, right? That'd be my macro perspective. Just want to see price continue to accelerate higher, which we're going to get right here. Actually, we might hang around. I just want to see if we get previous day high as well, real quick. Just tape reading this real quick. I want to see if we're going to close above. So this level was that fair value gap created during NFP. And notice we're creating a volume imbalance as we're trying to close above that. So if we do that, that is pretty bullish in my opinion. Actually, watch there. So watch that volume imbalance entry like that. Right, we just tap that. See if we tap and run. So no volume imbalance entry there. All right, close that. Closes in. Watching this one now. Something like this in here. See if we can't get higher. Holding that so far. Another volume imbalance. Looking at that. That gets left open. Should be like a high frequency trading algo entry. Right there. Another volume imbalance, right? So this is what I mean when I say we're creating a lot of bullish volume imbalances, which is indicating bullish order flow, especially because they're getting left open. So to me, right, like this fair value gap, wouldn't want to see that be traded into. Honestly, wouldn't want to see this one either. This wick completely trades into, right, basically the NFP high. So in my mind, we should just run from there. Let's see what we get here. If we end up coming back into this range, we'll just wrap it up. We've already met all of our objectives. Just want to see if we don't pump into previous day high as well. Boom. Okay. So down there. And yeah, we'll go ahead and end it for today. The final goodbye. As you guys saw, one last little recap. Just 2 entries today. Original entry here following the 9:30 open into internal range inefficiencies. Second entry here once we reconfirm bullish delivery. Right, using the 15-second chart as our entry mechanic, pairing it with a volume imbalance, and running into buy side. Missed one nice inversion setup here, right? Inversioning with the actual bullish fair value gap, but that's fine. We're content with enough, and it's just nice to see our objectives be met. So overall, we'll call it a day there. I already gave the macro perspective of next week. I'd like to see just continued bullish delivery. So coming into next week, we'll look for that. And yeah, until then, have a good weekend, everybody. Keep an eye out on the Twitter for the next YouTube stream. Yeah, until then, have a good weekend. Hope you guys enjoy it. Be safe, take care, and we will talk again next week. See you guys, everybody.